Hello traders. Today is the 17th of September 2012, and the time in London is 10:49 a.m. In New York, the time is 5:49. All right. The title of this video is MACD Reloaded Part 2. If you have not watched MACD Reloaded Part 1, you may do so before watching this part. Okay, very important, so you can understand, okay, exactly what we are talking about. Okay, all right, let's move on. In this video, MACD Reloaded Part 2, okay, we will look at a different aspect of MACD. Okay, this time I want to talk about the stable data that govern MACD. Okay, these are very important. We talk about the market stable data. Each indicator, okay, also, okay, has its own market stable data. Very powerful. Things that remain intact, that the indicator cannot violate. You see, so you want to build on a strong foundation. All right. In fact, I see in London, the foundation take longer. I see a lot of building works in London recently. They will be digging for days, for weeks, for months. Okay, but when the foundation is completed, okay, you can see that the rest of the world is so fast. They build it very fast. Okay, so we want to do exactly the same thing. Okay, when we are trading two, okay, stable data. When we are talking about MACD, the green line here is the simple moving average 20. I did not say exponential. I say simple moving average 20. The yellow one here is the simple moving average 50. All right. So when MACD, now here you can see the setting of my MACD here. Can you see 2059? That's why you must watch the first part. This MACD, which time frame I use it on? This is my own setting, or this is not the standard MACD. I use it only on the hourly chart, 2050. I never use it on any other time frame. Okay. Now I'm going to change the setting of this MACD because I want to use the standard MACD, the original MACD 12.26.9. So moment please, I'll do this right now. So in case, okay, you, okay, 26, okay, and the 9 is already here, 9, okay, 12, 26, 9. This is the standard MACD. Talking about MACD stable data, two aspects. When MACD is above its signal line, according to MACD itself, a stable data, the price should remain above the simple moving average 20. Sometimes MACD will be distorted, which can happen due to volatility or other forces that intervene in the market. MACD can be distorted. And if MACD is distorted, you will see sometimes, you can see here, MACD D below here. Can you see this section here? MACD D below is a signal line, but the price was still above the simple moving average 20, telling us that okay, as long as the price remained above, this is a beautiful signal, because MACD D below is signal line, pretending that okay, the price should go below the simple moving average 20, but the price did not. You see now, the price, the number one indicator, did not confirm the warning. Price remain here, boom. In fact, we have a higher low here. There was a lot of blah. I mean, you know the story. That's last week, okay? Blah. From the morning to the evening, that's how some traders make money. Blah. We want a quiet market where the market does not talk too much. We concentrate on the price, make money. But some of the people make money when there's a lot of blah. Okay? So distortion here. Price was still above the zero line, above the simple moving average 20. You see here, MACD was crossing below the signal line, telling us that the price should be below the simple moving average 20, but the price did not. As you can see, the price remained intact on top. So we don't want to sell in this scenario. But I explained something else to you in the first part of the video, how we deal with MACD crossing below a signal line. We want to sell at a resistance level and pay attention to, okay, the market pattern itself. All right. Here you can see
MACD crosses above its signal lines. By the way, these are videos that there were some video TS MACD Pro traders are sent to 2 traders recently about some of these MACD. Okay, because if I see that a trader is willing to understand something, I will communicate to trader directly. Okay, all right. So here you can see here MACD crosses above its signal line, telling that the price should remain above. Okay, the simple moving average 20. It's a powerful trading tool. The simple moving average 20. You see, some trader may use exponential moving average 20. It doesn't matter if you don't have a simple. All right, use exponential. It doesn't matter. Okay, no big difference. All right. Okay. So now when we see you see, so we can, as I explained to you in the previous video, I said MACD above signal line. It's telling that the price is above, okay, a bullish trend line. Okay. So you can see that MACD went all over the place because of some foxes in the market, blah 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 blah. So, but you can see during that time the price was all the time above, okay, the simple moving average 20, and in fact it did below it a bit only to quickly go back above it. You see now, sometimes MACD will give the warning first, which means close below a signal line. All right. Later on, you'll see that the price will confirm the warning, which will mark like here when we see now it did below it, we don't sell. That's why I say break below, retest. Okay. So somebody who wants to follow what I'm saying all the time, all right. Okay. We say okay. You see the trend line that I've drawn now. Let's color it this time. In pink this time, you can see this pink trend line. Okay, the trend line is a bullish trend line, rising trend line. A D below it, we want it to retest it here. Boom, pew down. You see, it's a wicked one. It's a news. You don't want to be around this time. Okay, pew pew pew. Or you see, up down. Yeah, take people out first. All right. So you will be looking to sell here, but this is a bad time because there was some news here last week. Okay, but it's not bad decision. If you manage to take your profit before they kick you out because it was down fast move. Okay, it didn't stop. Okay, break below the trend line and retest it. So you see, so though MACD is going up all over the place like this, okay, the price is above a rising trend line. The price above the simple moving average 20 is equal to the price above a rising, okay, common sense, okay, trend line. Common sense trend line is the first and nearest bullish trend line. Okay, common sense. The first and nearest bullish trend line is the common sense bullish trend line. The common sense, okay, the bearish trend line is the first and nearest bearish trend line. So sometimes we draw trend line very close to the price. You see here, I can draw another trend line if you understand what I'm talking about. Those who understand primary trend line, secondary trend line, which I post a video on YouTube about. If you draw another line like this, okay, this time we use a turquoise. It's also a bullish trend line. This one here, joining this point and this point, we have another bullish trend line. This is the turquoise one here. You see, so but the pink one also is a bullish trend line. Was broken. Price went to this level. We test it. Okay. The blue one also here is a bullish trend line, you see. So what I want you to remember, so you don't get confused, when MACD is above the signal line, when MACD is oversold, the standard of the price should remain above the simple moving average 20. Another trick that we can do, we can say that, okay, let's use the simple moving average 20, price above the simple moving average 20, consolidation, breakout, retest, we will take it, okay? We want to buy at the support level, at the value support level, if the price is above the simple moving average 20. We can say that. We can also say that when the price is below the simple moving average 20, we want to sell at the value resistance level. Break below, retest, turn around. Alright? break above, retest, turn around. If the price is above the simple moving average 20, we can say that. Or we can say if the price is above a rising trend line, we want to buy at a valid support level. The higher time frame command all lower time frames. We want to select, okay, the best entry point. So what's happening now? That's the first thing, talking about the simple moving average 20 and MACD here. The second stable data that MACD very often will follow is that the zero line price. Where are we? Here, the zero line is not very clear here, as my software did not draw it for me. Somewhere here. See this line, this horizontal line. You see this level here, somewhere here. Okay. So MACD crosses below the zero line. That's the second stable data for MACD. MACD crosses below the zero line. All right. He's telling us that the price should remain below the simple moving average 50. The simple moving average 50 is the yellow one here. As you can see, MACD dip below the zero line, but the price did not go below the simple moving average 20. This is a distortion. Quickly, the price, the MACD quickly returned to follow the price. So in fact, MACD has given a false signal, which the price did not confirm, and quickly MACD returned to confirm that the price was right. Okay, it realigned with the price itself quickly. You see, so this is a false signal. If you are somebody who always sell if MACD dip below the zero line, you want to understand. So the best strategy, ladies and gentlemen, break below, retest, turn around. So which means price coming below the simple moving average 20, you say, aha, that's what George said. So now you need to come back to the simple moving average 20, even go above it a bit for the trend line to be broken and bring it back down. That would be a better scenario. So it did below the zero line, all right? The price normal condition should go also below the simple moving average 20, simple moving average 50, my apologies, simple moving average 20. What's going on here? Simple moving average 50. Price MACD dip below the zero line. My apology, ladies and gentlemen. The price in normal condition should go below the simple moving average 50. But that's not always the case. Alright? But when we see MACD going below the zero line and the price also going below the simple moving average 50, we just say, aha, it can happen. So we will prefer it to come back down. What I said before, if the price is about to go down, the price must go up first, because the smart money will sell at the best place. Do exactly the same thing. So like today, okay, so let's move on. Okay, so this is the second stable data. Crossing below the zero line equal to price below the simple moving 50, but not always. The price is the number one indicator. The MACD can be distorted due to various reasons. A MACD can be slow, okay, to confirm the price. So sometimes the MACD can be a leading indicator, which means it will dip below the zero line before the price will go below the simple moving average 50. These are the two stable data regarding MACD. MACD above the signal line equal to the price above the simple moving average 20. MACD crossing below the zero line equals to the price going below the simple moving average 50. But the price is the number one indicator, and the MACD is an indicator, will give a warning. The price might confirm the warning before, okay, we pull the trigger, so to speak. All right, do not pull the trigger anyhow. All right. So this video is primarily for the TS MACD Pro traders. If you want to purchase the TS MACD Pro, you need to go to www.dayprotraders. There's no dash, just dayprotraders.com. www.dayprotraders.com. Click on TS MACD Pro. It's a different MACD with its own rules. Okay. This video is primarily for the TS MACD Pro traders to they know it now. So, but I mean, there are more things that we want traders to know. So, a trading tool does not trade for traders, but allow traders to make excellent decisions. Now, the understanding is the most important thing, and this is what we are doing here. Together, okay, the willingness of a serious trader to do well, okay, will pay off at one point, okay. All right. Okay, now we are now on the hourly chart, which I was before. I want to change time frame. It's valid on all time frame. We now go to the daily chart. It's on the daily chart now. The zero line, you see, it's my daughter. In fact, bring it down a bit. It's here. That's my zero line here. What I should do is color it into red because some trader complained last time that I'm using some funny colors. So, all right, I don't want to annoy my friends. Okay, all right. So, okay. Now you see, now that's my zero line. So you see here, sometimes you see gorgeous signal on the daily chart. See here, MACD crosses above the zero line, which is the red horizontal line here. You see the price above this gorgeous signal here. He went above it and pull back. That's what you want. Break above, retest, turn around, bye bye. Okay, and start giving higher lows. A low, a higher low, higher low, higher low, higher low, higher low. Boom, boom. We are now at a resistance level. Language of the price. Okay, all right. We don't want to forget the economy news as you have seen it last week, okay? And the fundamental traders, the momentum traders, do not forget other market participants. So MACD crosses above the zero line, MACD stable data, price in normal conditions should be above the simple moving 50, which is the zero line here. You can see that MACD was above the zero line and also above the signal line. The price is above 20, simple moving average 20, and also above, okay, the simple moving average 50. Everything aligned to us, telling us to look for an opportunity to buy. Now, what do we pay attention to? The market pattern. There was a consolidation on this daily chart. You see, blah, 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 boom, up, above, okay? There was a consolidation in this session. You see, when we draw a channel, horizontal channel, rising channel, declining channel, three things the price doing all the time, nothing else. So from the horizontal channel, we are now in a kind of a rising channel. A bit of exaggeration, as I said, I explained to TST traders already. There is exaggeration in the euro. Now I'm just, what I'll do, in fact, that's it. Okay, so this is it. So you can see that MACD cross is above the zero line. The price was above the simple moving 20. You can see it did below it, but it went above it. Okay, blah blah blah. This is what we are talking about. Higher time frame, signal time frame, entry time frame, TSTW, S008 traders will know how to cream this one nicely. Okay, all right, all right. So here we can see MACD crosses below the zero line. Here was a gorgeous signal. There was a harmony, okay, between the price and MACD. Same time, both MACD. You can see the price is going below the simple moving average 50. MACD also going below, okay, the zero line. This is gorgeous. This is what I'm telling you. You can see that the price did not give us a pullback. Normal condition, we prefer it to come back to the 50 or at least to the 20 before coming down. The bearish momentum was so strong. No, everybody want to sell. Okay, it happens sometimes. In this case, you have to go to a lower time frame to catch up the move. If it's too much for you, just watch it. Okay, don't stay out. Okay, if it's too much for you, just stay out, and another chance will come, and you will have your chance. But there was, in fact, you see, if you call on this one now in red. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. This is primarily for the TSTW traders and the TS MACD Pro traders. So you see this horizontal line is a very important level. You see, hold spot trading zone, D below, retest. It's a tricky one because even if I'm entering here, I will be saying, the small money may prefer to bring it here, which is, you want to take a tiny risk and watch it. If it work out perfectly, you need to switch time frame and control it perfectly. Okay, it was not easy. Okay, here again, so it's just two candle up, people sold it down. If it's going to go down, it must go up. That's what you want. You want it to go up first and then you sell it down. Don't sell it when it's going like this. Okay, it's a tricky one. Let it roll up, okay, and then push it down. Roll it up, push it down at the key level. All right. Okay, sometimes it's not easy, but you have to zoom into it. But once you determine the market pattern, you are likely to make excellent decision. What do? Draw a line, draw the channels, okay, that will help you to spot, because they hot a spot trading zone. That's where you want to trade, okay? Some trader will never trade, okay, in the void. They always trade on the edge. These are what I love to call smart traders. They trade like a crab, okay, on the edge, okay? They're going along the line on like a crab. They don't want, they are very risk averse, but these are the people who are remaining in the market for a long time. They will never, okay, wipe out. They can wipe out their trading account, but they can get their money back, okay? So they want to trade on the edge. If they don't see it on the edge, they want to, okay, sit on their hand and wait for the next opportunity. What I'm trying to do here is to join this point and this point. Now, because some traders may not see it. Okay, let's bring now again red. Okay, that's not bad. So this point and this one here. So at least it came back. Okay, so this point and this point allow me to draw this on the daily chart. It wasn't easy. It's a fast move. Okay, the price was going to the zone, going down fast. This is the pound dollar currency pair, by the way, the pound dollar currency pair. Okay. Okay. So this is about okay, MACD reloaded part 2. You see here on the daily chart, MACD crosses above, okay, is signal line. It's saying that the price is above, okay, the simple moving average 20. That's about momentum trading. In this, when the price is above the simple moving average 20, you want to know where are the resistance level, because the price is looking for a better resistance level. You want to buy above the 20, but you don't want to buy anyhow. You want to buy at a value support level, break above, retest, turn around. You can see the price, you see, it went up and tried to come down, okay, here. See the horizontal line here, you break above it, and try to retest it here, okay? All right, this session. All right, so the stable data of MACD is valid on all time frame. If we go now, as I'm speaking to you now, let's go to the 50-minute chart, a very crowded time frame when traders are playing with the stochastic anyhow. So we are now, okay, my zero line is here on the 50-minute chart. That's where it is now. You can see that MACD is now, as I'm speaking to you now, the time in London is 11:12. Today is the 17th of September, okay, 2012. You see that MACD is now below the zero line on the 50-minute chart. The higher time frame command the lower time frame. One should not make a trading decision on one single time frame. Very important. It's a market stable data. When we are applying one market stable data, we don't want to violate another market stable data. Okay? So, all right, my screen is frozen for a while now. Too much blah 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 going on my screen now. I need to wait a bit. Okay, now, so we can see that the yellow line is the simple moving average 20, is simple moving average 50. Yeah, you can see that though the price going, you can see what's happening here. That's what we are saying. The good question: what's happening? Price consolidating. This is the market pattern. That's what we are talking about, which I talked about already. Okay, in the first part of the video that we titled MACD Reloaded Part 1. In this video, we have discussed the MACD stable data. MACD above the signal line. The price in normal conditions should be above the simple moving average 20. MACD crossing below the zero line. The price should be below the simple moving average 50. MACD crossing above the zero line. The price in normal conditions should be above the simple moving average 50. All right. MACD crosses below a signal line. In normal condition, the price should be below the simple moving average 20. Talking about MACD, MACD is an indicator, but the price is the number one indicator. One must pay attention to the trading, okay, triangle, the market stable data, and also, okay, the market patterns, okay. When one start trading, when one is a new trader, one must learn slowly but gradually, okay, to improve the ability to trade, okay, to avoid repeating the same mistake consistently. Drawing trend line and channel and keeping eyes wide open will allow traders to make excellent trading decisions. If you are a TS MACD Pro trader and you have any question, please do not hesitate, okay, to contact us, okay, and then we will surely get back to you. I hope you have enjoyed this video about MACD Reloaded Part 2 that you will put into use, okay, in order, okay, to cream the market consistently. Until the next time, enjoy yourself and be very happy. We are the TS MACD Pro traders.